Hi, my name is Antonio Gastelum and I'm a partner at Meg International Counsel with offices in San Diego and Houston. In today's video, we're going to talk about how foreigners should gift money to U.S. citizens and resident aliens. Join us. In order for a foreigner to avoid the U.S. gift tax for any gifts made to a U.S. citizen or resident alien, it is necessary that the gratuitous transfer of the asset be real, legal, or implied, and that it's made by a foreign resident individual, estate, or trust outside of the geographical limits of the United States, while the gifted asset is also located outside its borders. Typically, if a foreigner gives money or property, except intangibles such as securities, to anyone in the world while the transfer is originated or completed, or while the gifted property is located in the U.S., the foreign transfer must pay a gift tax if the value of the gift exceeds $15,000 per beneficiary in a calendar year. It is quite common that parents or family members living outside the U.S., as well as their estates sometimes, make gifts of money and other property to their U.S. citizen or resident alien children or relatives. When such transfers of money happen or originate from the parent's bank account in the U.S., such transfer is subject to tax if it exceeds the $15,000 threshold per beneficiary per year. If the transfer originates abroad, however, and concludes or is completed by a deposit into the recipient's U.S. bank account, then the gift may avoid the U.S. gift tax. Now, we say may because there hasn't been a court decision on the subject, and the IRS refuses to issue any private letter rulings or offer guidance on the subject matter. The fact is that there are millions, thousands, if not millions of electronic transactions or deposits being made every year from abroad into the U.S. bank accounts belonging to U.S. citizens and resident aliens alike, and there has not been any indication that such transfers are being subjected to gift taxes. Notwithstanding the foregoing, however, given how the law is written, not how it has been applied de facto, we'd rather be safe than sorry and recommend that any gifts, especially of money being made by foreigners to U.S. persons, should be made and completed outside of the United States. For instance, foreign resident parents may gift any amount to their U.S. child and deposit it into an account held in a foreign bank account in their child's name. Once the money has been transferred into that account, the child owns the money and he can then transfer the money directly into his U.S. account without the risk of any gift taxes. Now, even though these transfers by the foreign resident donors are not generally subject to tax, the beneficiaries or donees of such gifts in the U.S. must comply with different filing and informational obligations to avoid the risk of being fined or deemed receiving other economic sanctions. Therefore, when a U.S. citizen or resident alien, here we need to include those foreigners with or without a visa of any kind, even those that are not subject to the income tax by having exercised a closer connection exception under the law or under a tax treaty, they must inform and file an annual return called Annual Return to report transactions with foreign trusts and receipt of certain foreign gifts. The date to do this the due date is April 15 of the year following the year of receiving any and all gifts that exceed $100,000 from foreign individuals, estates, and trusts. This is, you must declare all the gifts received in 1 year that together exceed the amount of $100,000. This return must then be filed regardless of who has made the free transfer. Therefore, it is not limited to those gifts received from foreign family members, individuals, states, or trusts, because in case of a gift is made by a foreign entity, meaning corporation or partnership, the minimum threshold to file the return then is reduced to $16,076 for gifts received in 2018. And this amount is also annually indexed to the inflation. Now, when the free transfers are originated from foreign entities or trusts, there is also the obligation by the beneficiary or donee who receives the gifts to pay the income tax. These payments must be made when filing Form 3520 mentioned above. Lastly, the penalties incurred for not filing on time or by filing an incomplete or incorrect Form 3520 shall be a fine of at least $10,000 or 5% of the gifted value up to 25%, whichever is higher, for each month after the date in which the form had to be filed. For transfers originated from foreign trusts, the initial fine is $10,000 or 35% of the gifted value, whichever is higher. So not only do you not want to forget to file the form, but also if you file it, you must file it correctly and complete. Otherwise, you're still subject to the penalty. Okay? So I hope you enjoyed the video and hope you join us for the following ones as well. Thank you.